Property prices in Australia have fallen for the 6th month in a row as rising interest rates drive down home values in nearly every market across the country. Last month, October saw a national median house price decline of 1.2%, bringing the overall decline of home values since a peak in April up to 7.2%. In Australia's third largest city, Brisbane, prices now fell by 2% overall, while declines in Sydney and Melbourne were more than modest at minus 1.3% and 0.8%. However, while the rate of price declines is slowing amid the largest rise in interest rates since the 1990s, I believe it's still too early to say whether the worst is over. Now, Australian borrowers face the double whammy of more interest rate hikes as well as relentless high and rising inflation. There's also a genuine risk that the rate of decline will reaccelerate as interest rates climb further and household balance sheets become much more thinly stretched. Interest rates are expected to peak in the first half of 2023. However, values might fall by less than 25% increase seen during the pandemic years. Widening real estate market downturns. Every market, with the exception of regional South Australia, had lower values in October, extending the decline in the property market. Some markets are faring better than others, with property values maintaining steady in Perth and Adelaide. Housing values in capital cities combined have decreased by negative 6.5% after rising by 25% during the upswing. That's large, but we're just getting started. Sydney's home values also have dropped by about 10%, from 27% since peaking in January, while Melbourne values have dropped by 6.4% from 17% since February, although the numbers aren't good. Housing demand still remains stable. As values have declined, there are fewer homes for sale across Australia, and more sellers are choosing not to enter the market because of this. In yearly terms, the number of newly listed homes in capital cities decreased by 25% over October, and it fell by around 19% below the 5-year average. However, home demand has remained largely stable, as seen by sales that currently 3.8% higher than 5-year average. The most resilient segment of the market has been subsequent buyers, including upgraders, downsizers, and movers. Now sales volume will probably trend lower as interest rates continue to climb, since there will be less money available for borrowing. And rents are rising. Along with house prices falling, rent hikes are also speeding up. CoreLogic reports that rents rose another 0.6% in October, led by a 1.1% increase in unit rents and a 0.5% increase in house rents. In Melbourne, rents rose 13% year on year in October, while in Sydney, rents rose 13.4%. Although these increases are higher than what we thought it would be, the pace of rent increases is now beginning to slow as we approach Christmas. In conclusion, renters will likely start looking for rental options in the medium to high dense sector where rent is less expensive, or increase the number of persons in a tenancy in an effort to distribute rising rental expenses, even if prices are anticipated to rise further. Alright guys, thanks for watching my video. If you got any questions, please leave a comment below, and I'll see you in the next video. And give me a thumbs up if you can. I'd appreciate it. See you later.